So hi everyone, pleasure to be here and to introduce Anne Boden to you. She's had a very distinguished career as a banker in many distinguished organizations such as RBS and ABN AMRO and many others. And we'll talk today a bit about open banking, what it really means. Ricky did a phenomenal job, I thought, of setting the stage. And I'm sure Anne has some comments about some of the things he said. Maybe just briefly, who is Speedinvest? We're a venture fund. We have made 80 investments across Europe, 20 of those in fintech. Some of the companies you might have heard of, like WeFox in the insurance space, Payworks, EasyCo, and I've also been involved from day one in N26. Where I'm on the board. And we've invested here in the UK in Loot and Curve, which some of you might have heard of, which are taking, again, a different approach to some of the topics we're discussing today. So pleasure to welcome you. Why don't we just fast forward and maybe pick up some of the things Ricky said and continue the conversation there. So one of the things Ricky said that I found striking is marketplace really forces you as a bank to decide whether to use it for the benefit of your customers or to actually make money with it. How do you comment? How would you comment on this?
Anyway, thank you, Ricky, for teeing all this up. Great intro. So, sort of, first probably a couple of minutes for those of you that haven't sort of been listening to the whole intro from Ricky on Starling. Starling, a new bank, a new digital bank. We believe in marketplace. We're really big on marketplace, and we're the first current account to market from a new digital player in the UK. Marketplaces and what is a true marketplace? We intend to make money from the marketplace proposition. And we intend not to be bashful about the fact that we're going to provide a good service, making sure our customers get the right products from the right providers. And we are one of the few people who are actually regulated to provide these services. If you go to the FCA register, you'll look up Starling Bank and you see that, unlike the other sort of competitors in the marketplace, we have a whole list of permissions. Including selling funeral plans, and that's a mistake. Okay, we just tick too many boxes. But we believe that that consumers should trust us, and we should be regulated to provide the right products to consumers. If you look at people like sort of Revolut, I believe in some circumstances they're offering these products as appointed representatives of the insurers. What we've decided to do is to make sure we have all the regulations to provide all the products. And that means that we can actually take commissions. Now, what I think it's probably worth me going off at a bit of a tangent and talking about why PSD2 is so important, the importance of APIs, and how marketplace is a step beyond that. All banks now have to offer a way of the customer accessing their data since PSD2, Payment Service Directive 2, came into force in January this year. The intention is, beyond September 2019, that this will be via an API. The banks in the UK are slowly implementing those APIs. Starling from day one was PSD2 compliant, which means that our customers can share their data with financial services providers in a safe and secure way. What that means is that there's data going from the bank to the consumer of that API, whether an insurer or a mortgage provider. And because they consume that customer data, they have more information about the customer, and they can make better underwriting decisions or rating decisions generally. But where that goes, and if you offer that service to your customers, you can't necessarily charge for it. But if you consume APIs in the other direction, and you link in both directions using APIs, and you take commission from those providers in the marketplace, then you need a regulatory permission. I was Chief Information Officer for many years of Aon Corporation, one of the largest insurance brokers in the world. And I know the complexity of offering insurance products. And going down this route of offering a marketplace shouldn't be done lightly. It is an extremely complex business, and we take risk on by offering these products to our customers. So it shouldn't be done lightly, and it shouldn't be actually dismissed as a bit of an extra add-on. It is a fundamentally part of the Starling proposition, because we have all this data about customers, and the proposition from Starling is to use that data with the help of machine learning and artificial intelligence to surface the right products for the right customers in the right way, in a fully regulated environment that gives the customer a certain amount of security and safety.
So Anne, just so I understand it, let's take Habito, which is one of your partners in the mortgage space. So in order to offer mortgages through Habito to your customers, to Starling Bank customers, did you have to become a licensed mortgage broker?
We had to have a mortgage arrangement permission.
Okay,
and that took us 7-8 months.
And so are you insinuating that there might be players that don't have that license? And what does that mean?
I'm not insinuating. I'm saying that we have chosen to generate a revenue stream from those propositions. So there's two ways that people actually implement these marketplaces. You either become an appointed representative of an insurance company and actually have one or two products where the burden is that you have to fulfill the regulatory obligations to that insurance provider. Or you become, in some respects, get regulatory permissions to be a comparison site. But what we have decided to do is that we're a credit broker. We arrange mortgages. We have a whole set of permissions, which means that we're doing this as a serious business. It isn't we realize what we're taking on, and we have got the regulatory permissions and the infrastructure and the services around it to do this in a professional way.
Got it. And so give us some color on how it is working. I mean, this is a very recent development. Mm-hmm. You've been one of the first to offer very specific applications to Starling customers. How is it working? Are people using it? Is it scaling? Is it converting? What are you seeing? Give us some color.
It's still the early days. It's always been in our business plan that we were going to build something which was going to leverage the data and let the customer use that data to access products. The pipeline is very long. We have something like 90 or so different customers currently, different partners currently queuing up to go into the marketplace. It tends to be stop-start with a lot of our partners. You usually get one or two people in that firm, and these are some of these are biggest, largest corporations in the world that are going into the marketplace, and some are tiny. Okay, where you have one person coming to the conclusion that this model will replace broking, this model will replace comparison sites, and you have a senior strategic person in a big financial institution taking this decision and starting discussions with us. Then negotiations take some time until you get a commercial arrangement. and then they go to their IT department and say okay, we're all ready now, we're going to go live soon. And the IT department says, well, in 6 months' time, actually. So you have some organisations that are struggling on the regulatory side. Some are struggling on the technology, and some on the commercial. But at the moment, we're hoping to have 25 live by the end of the year. As far as consumers are concerned, we went live sort of with one product, and a couple of thousand people made those connections in the first day.
Fantastic. I mean, you also have partners like TrueLayer, if I understand correctly. Aren't you concerned that some of them who will be looking into your clients' accounts, with their consent, of course, might use that data to offer them better services from other banks? Is that not something that you might be afraid of?
We can't stop that happening. Under PSD2, TrueLayer is not a member of our marketplace. TrueLayer is using our data under open banking rules. So that means that we can't say no. All those various companies have the right to connect to us so that their customers and our customers can exchange data. But I think that in this new world, you have to be competitive. And if you can't offer customers something compelling, and you can't keep up with the marketplace in the wider sense, you shouldn't be in business.
But in reality, I think that Ricky and Starling and all the others that he showed, in many ways, you're all trying to take advantage of a fundamental shift and taking hold of the majority of customers who are still with the high street banks, right? And so I'm wondering whether what's going on. I mean, it's like Barclays, RBS. Do they even have APIs? Do they actually work? Can TrueLayer already go in there and do the same thing with their customers? Because that's the big prize, isn't it, for you guys?
I think that we're in a situation where the market's moving much faster than we ever thought. Back in 2014, when I had my first meeting with the regulator, June 2014, I set out a world that was PSD2 compliant, that had a marketplace, that was all about doing current accounts, transactional banking on a new technology stack. It's taken 4 years to get here. In the meantime, the big banks haven't been sitting there twiddling their thumbs. The big banks are full of bright people, clever people, and boards that get it. Let's not delude ourselves that the big banks aren't thinking about this. They are. They are, in the UK, open banking is being rolled out, and everybody will have APIs. I think that the big banks will copy every single function that that the Revoluts, the Starlings, the Tandems will deliver. What they won't be able to copy is the cost base. What's actually happening at the moment is the big banks are delivering new product, but they're delivering it on top of existing infrastructure. So I think that the challenge of the future is not going to be about product innovation. It's going to be about whether the big banks can slim down fast enough to compete. So what we have at the moment is, lots of prepaid card propositions, lots of new products to marketplace that are giving customers something new, something different, something compelling. They are pushing prices down. The big banks can simply go into a table and change their pricing. That's easy. They can actually create layers above the existing infrastructures to actually deliver the functionality. But they have tens of thousands of people doing it, and legacy and history. And I was there. I chose to quit and start again because it was easier.
That's an interesting statement. I would have argued that the fintechs like you and Ricky do have a time advantage in developing new features and new products and just convenience on the mobile phone, which the banks have been very slow to adapt. I agree, it will take some time for them to catch up, maybe 1 year, maybe 2 years, but it's probably time enough to grab enough market share to make it profitable, because you guys don't need much market share actually to be profitable as Ricky pointed out. But so that's really interesting. What do you make of all this fundraising going on right now? Atom just made a very large round with a bank, BBVA, participating, which is also interesting. N26 just did a large round with Tencent and Allianz leading. And there will be a lot more. We're all expecting Revolut to again do a big round at some point. So what do you make of this? That's a lot of funding going into customer acquisition, and the UK is particularly competitive. How do you feel about that?
I think that there is a lot of money sort of seeking homes in a very fashionable segment at present. You know, sort of 4 years, 3-4 years ago when we started this, nobody really took the idea of a new digital bank, new technology stacks, new retail propositions seriously. Things are very, very different now. But we're all very different in our propositions, and we all offer something very different to investors. Starling, we have quite a B2B offering. We have a retail proposition. We have a business account coming out very soon. We are already members of SEPA in Europe. And we also have a B2B proposition where several of the people in the audience here today are actually customers of our payment services business. We have a range of customers, including the UK government. We service Department of Work and Pensions. So all these businesses are presenting lots of different alternatives and bets for the VC world.
Fantastic. I think we might want to move into questions, Ryan? Yeah, sure. So Anne, if you may, I want to maybe check out some of these questions. Will you be transparent about how much commission that you can earn from providers in your marketplace?
Yeah,
about that?
We actually disclose in the marketplace how much commission we're getting for each and every deal.
Okay, great. All right. Let's see. Will you launch a marketplace for business customers too?
Yes.
Okay, that was clear. How many customers do you have who have actually purchased a marketplace product? It's still early days.
It's the last time I checked, it was more than 5,000, but less than 10. So at the moment, it's in very, very early days.
Probably more
but
than
it's
most.
growing.
Probably more than most.
Yep.
Let's see. With PSD2, won't customers go direct to the people you partner with? I think we've kind of covered that, didn't we? All right, let's take one more. How will GDPR starting in May affect open banking and your service offering?
It doesn't actually. I think that an awful lot of people have been thinking through how GDPR and PSD2 work together. I think lots of us are overthinking it. Most of us are totally obsessed by it and have taken a lot of advice. But we don't think it's going to have a huge effect on us.
Okay. And lastly, what's the timeline all the UK banks have, I guess, sharing the data, where is it? And serve through the API.
Okay.
Yeah.
Probably it's worthwhile just summarising the timetable for PSD2 and how open banking works and how the technical standard implementations link together. PSD2 is the Payment Services Directive, which came into force in January this year. That means that all banks have to allow their customers access to their data. In the UK, as part of the recommendation from the Competition and Markets Authority, an order was made on the 9 big banks in the UK called the CMA 9 that they had to implement those access protocols as APIs in the middle of January this year. Some of the banks were there on time, some were very, very late, and some will actually deliver it till the end of the year. At that particular, from January this year, it is now frowned upon for customers to be told by big banks, by any bank, that they cannot share, that they should not share their logons and their credentials. And the reason for that is that all banks from January this year have to allow customers to share their data freely. And if a bank doesn't have an API, customers can do it using logons, passwords and credentials. However, in September 2019, that becomes illegal, and all banks must offer API access using the European technical standards to all their customers.
Great, thank you very much.
Okay.
And I think we're at the end of the session. Thanks a lot. Okay. And see you next year.